Hi friends. So my name is Santosh. We are from the BGR Commerce Hub. Now we are having a discussion. We are going to discuss on impact of GST on software industry. So impact of GST on software industry. So what is the software industry? What the software industry will do? The software industry will develop the software and will sell the software to the customers. So sales. So if you are thinking GST point of view, you have to think about sales. GST means you have to think about sales and purchases. So why you have to think about sales and purchases in GST? From sales, you will get output tax. From purchases, you will get input tax. So what is the GST ultimate goal? GST calculation. That means you have to pay every month GST to the department. GST calculation. How the GST will be calculated? Simple. Output tax minus input tax. This is simple formula of GST calculation. Now you should think about whenever you are working as a GST consultant or whenever you are working as a GST accountant, you have to take decision what is the input tax to your company and what is the output tax to your company. What is the output tax? Output tax is a tax on sales. What is the input tax? Input tax is a tax on purchases. Now we have to decide what are the sales for the software company, what are the purchases for the software company. So come to sales first. What are the sales for the software company? Generally, you think sales means for software company only sale of services. So when to the GST point of view, sales you should classify whether you are selling the goods or whether you are selling the services. Whether software company is only selling the services or whether software company is also selling the goods. First you have to decide this. Now the conclusion is some software companies will sell only services. Some software companies will sell only goods. Some software companies will sell both sale of goods and sale of services. So why we have to bifurcate sales into sale of goods and sale of services? Because if you're selling the goods, you have to charge HSN code in the sales invoice. If you are selling the goods, you have to mention HSN code in the sales invoice. If you are selling the services, you have to mention SAC code in the sales invoice. I got the point. Why you should divide the sales into sale of goods and sale of services. Now the software company is selling the goods or services is a question. Here softwares, that means the software company is selling the software. The softwares are two types. One is pre-packaged software, second one is customized software. What is the pre-packaged software? Pre-packaged software means it is a software developed by the software company and packed and selling the same software to everybody. Then the software is called pre-packaged software, like Tally, MS Office, etc. That means the Tally company is developing the Tally and it is selling to everybody. Suppose if you purchase Tally, the Tally person will give the same Tally. If I purchase the Tally person will sell the same Tally. That means the Tally is same for every company. So pre-packaged software are the goods. Pre-packaged software are the goods. That means the Tally company is selling the Tally. That means the Tally company is selling the goods because it is a pre-packaged software. That means the Tally company will mention HSN code in the sales invoice. Get the point? Softwares are two types: pre-packaged software, customized software. Sir, how to decide whether they are selling the pre-packaged software or customized software? See that whether the software is unique for all customers, then it is a pre-packaged software. Pre-packaged software are the goods. Then you have to charge, then you have to apply HSN code in the sales invoice. GST rate is 18%. What is the customized software? Customized software means the software is developed based on the customer requirement. That means the software company will start developing the software whenever the order is received. That means it is developing according to the customer requirements like SAP, Oracle, etc. That means suppose for your company you want SAP. That means for your company, if you want SAP, the SAP is not ready-made. The SAP has to give order to Infosys or any company, TCS, whatever company. Then the company will come to your company and will study your requirement and they will start developing the software. So customized software are the services. Customized software are the services. That means the company has to mention SAC code in the sales invoice. GST rate is 18%. GST rate is common for both softwares, whether it is a pre-packaged software or custom-made software. GST rate is 18% for entire software industry. For entire software industry, GST rate is 18%. So this is about sales. So the software company may sell goods or may sell services or may sell both. Okay. What is the GST rate you have to charge on your sales? 18%. Whether it is a pre-packaged software or customized software. That means you got a output tax. So from sales, you will get a output tax. Now, what are the purchases to the software company? What are the purchases? Why you should think about purchases? Because from purchases, you will get a input tax. From purchases, you will get a input tax. So generally, the purchases of any business, not only a software company, the purchases of any business is classified into 4 types. Purchase of goods, purchase of capital goods, purchase of expenditure, purchase of service. You know, purchase of goods, maybe raw materials or finished goods. What is the meaning of capital goods? Capital goods means fixed assets. Capital goods means fixed assets. Purchase of expenditure. What is the purchase of meaning of purchase of expenditure? For example, if you purchase printing and stationery for your company, that means you purchased the expenditure. Purchase of service. So what is the meaning of purchase of service? For example, for your company, for your software company, the auditor had done the auditing. That means from auditor you purchased the services. 99% for software company, there will not be any purchase of goods. That means the software company may purchase capital goods, the software company may purchase expenditure, the software company may purchase service. Simple example. For your company, you purchase the computer. That means you purchase the capital goods. For your company, you purchase the printing and stationery. That means you purchase the expenditure. For your company, the auditor had done the auditing. That means from auditor you purchase the service. 99% for software company will not purchase the goods. Now, on which purchases I am eligible for input tax credit? On which purchases I am eligible for input tax credit? So normally input tax will come from purchases. Whether all purchases are eligible for input tax credit? Yes, you are eligible for input tax credit whether you purchase the capital goods or either you purchase the expenditure or either you purchase the services. For example, for your company you purchase the computer. The computer seller will charge GST to you. Whether the GST can you take input tax credit? Yes, you can take input tax credit. So from purchases you will get a input tax. So from sales you will get output tax. From purchases you will get a input tax. Now from auditor, the auditor had done the auditing for your company. The auditor will charge a GST in the sales invoice. That is a purchase invoice to you. Whether you can take input tax on the purchases? Yes, you can take. That means all purchases are eligible for input tax credit for one software company. Now simply every month you can calculate output tax minus input tax. You will get GST calculation. That you have to divide into GST, GST, IGST. That is a different topic. Now this discussion is for Indian software companies. This discussion is for Indian software companies. That means you are developing the software and you are selling the software in India, or you are developing the software or you are selling the software. Some software, some portion of sales in India, some portion of sales in outside India, then this is suitable for you. Then what about 100% EOU? EOU means export oriented unit. Sir, my company is a 100%, my software company is a 100% EOU. That means whatever the software you will develop and you will sell only to the US, only to the foreign company, only export sales. That means you will not sell the software in India. You will do 100% export oriented unit. Then how the GST will have an impact on this 100% export oriented unit? Getting the point? Now, take some example. Your company, parent company is in US. Your parent company is in US. The parent company had established one company in India that is called subsidiary company. So your parent company is in US. The parent company had established another company in India that is called subsidiary company. This Indian subsidiary company will only work for US parent company. That means in India, the Indian subsidiary company will develop the software. That 100% whatever software they have developed, they will sell to only US company. That means export of sales, 100% exports. You know, export sales are zero rated sales. Export sales are zero rated sales. That means on exports, you need not to charge the GST. That means this 100% export oriented company, this 100% export oriented company, that 100% export company, no output tax. Getting the point? No output tax. This 100% export oriented company will not have a output tax because you need not to charge the output tax. Then what about input tax? Getting my point? 100% export oriented company, that means they are 100% they are exporting the goods or services. On exports, GST is not applicable. That means there is no output tax to your company. Now the question is whether you can take input tax on your purchases or not is a question. Whether you will eligible for input tax credit on your purchases. Getting my point? For your company, there is no output tax. Whether you can take input tax credit or not on your purchases. Normally, what will be the purchase for this Indian company? This Indian company has to also purchase computers. This Indian company has to purchase stationery. This Indian company has to purchase services, security services, auditor services, so many services. Whether on these purchases, this 100% EOU can take input tax credit or not is a question. Getting my point? You are not having output tax. Whether you can take input tax credit or not in your local purchases. Normally, what you will do your input tax? What you will do with input tax? You will set off this input tax from output tax. Getting my point? What is the benefit of input tax? You will set off input tax from output tax. Now here, 100% export oriented unit is not having output tax. Then if you take input tax, what you will take with this input tax? Getting my point? Suppose if you take input tax on your purchases, what you will do with this input tax? If you have output tax, you can set off. Getting my point? Then 100% you can take input tax credit. The conclusion is the 100% export oriented unit can take input tax credit on your purchases. Yes, you can take. Then what you will do with that input tax? If you have output tax, you can set off, but you are not having output tax. Then 100% EOUs can apply for refund. Can apply for refund to the GST department. Can apply for refund to the GST department. Getting my point? That means whatever input tax you have taken, you can apply for refund to the GST department. Your input tax is not wasted to you. You can apply for refund to the GST department. What is the refund application in RFD 01? In RFD 01, the GST department will give the refund of your input tax. But there are so many conditions for applying for refund. Suppose if the software company wants to get a refund of input tax credit, that some conditions are there. What are some conditions? First, you should have a STPA registration. First, you should have a STPA registration. STPA registration. STPA means Software Technology Park of India. First, you should have a STPA registration. STPA means Software Technology Park of India. That means this 100% export-oriented software company, first you should have a STPA registration. Then you should bring foreign currency. You should bring foreign currency into India within 180 days. Within 180 days. So whatever exports you have done, that means whatever sales you have exported, the sales amount you should bring to India within 180 days. That means you have to produce the FIRC copies to the GST department whenever you are applying for refund. FIRC means foreign inward remittance. FIRC means foreign inward remittance certificate. That means whatever the sales you have done, that sales proceeds, that sales amount you should bring to India within 180 days, and you should submit the FIRC copies to the GST department. Then only the GST department will sanction refund to you. So this is a lengthy procedure how to apply for GST refund. First, you should have a STPA registration. First, you should bring the sales amount into India. FIRC, who will give the FIRC copies to you? FIRC copies will be given by banker. Banker will give you the FIRC copies after receiving the amount. Then regularly you should file STPA returns. You should file every month STPA returns. STPA returns. You have to submit the STPA returns every month to the STPA department, Software Technology Park of India. So this is the very important concept, 100% EOU, export oriented unit. How the GST will have an impact on 100% export oriented unit. So this is normal Indian companies. Normally the companies selling the goods in India, then this is simple concept. The output tax, input tax. Input tax means purchase of capital goods, purchase of expenditure, purchase of services. This is most important 100% export oriented unit. 100% your company is a export company. Then this is the situation you have to understand. Then you can apply for GST refund. So if you have a detailed discussion on software industry on export, it will take 1 hour, 2 hours to discuss on GST refund procedure. GST RFD, how to apply for RFD 01. That is another topic. Thank you.